What's up, guys? Stas here. So listen, we're going to break down 5 stocks in this video that I'm looking at, all of which reported earnings this week, and maybe later in the video, if we have time, we'll break down the overall indexes, what's going on right now. So if you all find value, hit that like button. Make sure to subscribe. I appreciate you all as always. And don't forget to get up to 16 stocks for Moomoo, each up to $2,000, guys. Check out that link down below. And one of those stocks, depending on how much money you deposit, is guaranteed to be either Tesla stock or Google. So get on it. Link down below. And of course, make sure to follow me on Twitter or X. I mean, guys, honestly, I'm going to call it Twitter forever. So make sure to go follow me on Twitter at StasSurfS. Link down below as well. Or just type in Stas Talk Stocks. And with that being said, folks, cheers. Let's dive into it. So it's currently about 2:45 p.m. when I'm making this video. And mind you, today's the 1st of September. It's, what is it? Friday? Yeah, of course it's Friday. How could I forget it's Friday, guys? Yeah, it is Friday right now. And we have about an hour, 15 minutes left of trading. And by the time I'm done making this video, we're going to be entering Power Hour. And we have all the indexes except for the NASDAQ, which of course is the, the tech-heavy index. And the S&P is actually about to go red. It's actually at break even. But we have the NASDAQ down 0.3%. The Dow's up 0.2%, the S&P's at break even, and we have the Russell outperforming by far. It is up what? Let's see, 1.1% on the day right now, which is pretty solid. And we can see overall SPY's breaking out on the 4-hour chart. We're above the moving averages. That's great. And Triple Q is doing the same thing. You guys can see that. Boom, we're above the moving averages. We're above the neckline here of the head and shoulders, which is awesome. So before we get too carried away here with Triple Q and SPY, let's break down these 5 companies that I'm looking at, these 5 stocks, all of which just reported earnings within the last couple of days. So the first one is Lululemon, which you guys may or may not have heard of. I'm assuming everybody out there has heard of Lululemon. Their stock is now up 5.7% on the day, and this is completely breaking out, folks. Do you guys see this right here? We had an ascending triangle, and now we're breaking out above $400, and we're clearly above 390, which was resistance all throughout the end of March, heading into the end of August, literally yesterday. So we're breaking out of that point. We're now at 402. The high of the day was 404, and of course they're doing, or they reported rather, very strong numbers. So let me actually come down here and see. They reported yesterday, by the way, guys. You probably saw them. It looks like they did 268 EPS, which beat the 254 expected, and sales also beat $2.21 billion versus $2.17 billion expected. So double beat for Lululemon, and their guidance, I believe, yeah, they upped it, right? They see Q3 EPS of 223 to 228 versus 223 expected, and revenue of 2.16 billion versus the 2.15, and actually the upper end of that range is 2.19 billion. So yeah, guidance is very strong for Lulu. They beat on the previous quarter. And let me see here, guys. Anything else? Looks like full year EPS, yep, above the estimate. Same thing with revenue. So yeah, they're kicking you-know-what on all cylinders right now, and their stock is being rewarded. We're now at a fresh high on the 4-hour chart. Not sure if it's an all-time high. Probably not, if I had to guess. Yeah, all-time high is 485, and now we're at 402. We're getting awfully close, guys. And now the next main resistance that I'm looking at is about 410. You guys can see right here if I zoom in. 410 is where we peaked in, let's see, when was that? April of 2022. So that's the next main resistance. If that were to break, we could start pushing, 435. That was the high from November. September rather of 2021. And then maybe 485 could be next after that, which is the all-time high from November of 2021, which at this point, guys, is almost 2 years ago. Yeah, almost 2 years ago. So Lulu is doing well. They're crushing it, and they're approaching a big resistance, guys. So if we break out of here, let me put my alert at 415. This momentum could surely continue, in my personal opinion. So that's Lululemon, ticker symbol LULU, and Broadcom is the next one, folks, which is AVGO. They're down 5.3% right now, and this company reported earnings a couple of days ago, right? Or was that yesterday? Or was that, yeah, that was yesterday. Saturday after the bell. That's right. And again, their stock's down over 5%. So let me see what they did. Looks like they did 1054 in EPS, which beat the 1042 expected. That's good. And they beat on sales $8.88 billion versus $8.86 billion expected. So nice double beat for Broadcom. And it looks like they see Q4 revenue roughly at $9.27 billion versus $9.28 billion, expected. So pretty much right in line there with the estimates for revenue for the next quarter. Let me see. CEO networking revenue was at $2.8 billion, yada, yada, yada. It was up over 20% or roughly 20% year over year. Not bad. And it looks like here KeyBank maintains overweight on Broadcom, raised their price target to 1,000. That's not going to budge the stock, guys. Clearly, another one here. KeyBank, they have an overweight rating. All right, that's the same one from before. Jefferies adjusted their price target to $10.35 from $910. They're maintaining a buy rating. So AVGO, guys, a lot of analysts are still bullish, and their stock is down 5%. Interesting. We'll see. Maybe this is a short-term drop. We might bounce off of the 50 SMA on the 4-hour chart, 180 SMA, maybe. Keyword is maybe. Nothing's guaranteed, guys. But yeah, AVGO, Broadcom Inc., keep your eyes on it. CPB is another one that I'm looking at, of course, which you guys can see it's getting destroyed, right? It is down 2%. This is Campbell Soup, if you guys didn't know, and their stock is at a fresh low right now on this 4-hour chart, which is nuts. It's now down 30% from the recent highs and probably down even more from the all-time highs. I remember this thing being an $80 stock, right? Let me double check and see if I'm right. I'm probably wrong. Yeah, I'm wrong. It was a $67 stock. Excuse me, guys. That was back in 2016. And now just year to date, it is down, like I said, 25%. So there could be some value opening up here. I'm not saying for sure. I've not done my research yet. But this is one that might be worth looking into. I don't know. I think they have good pricing power, products that are probably going to be here for a while. Obviously, there's something going on here that's causing their stock to go down. Or maybe it's just an overall rotation. I mean, you guys know the big boys, the hedge funds, Wall Street out there, they've been getting out of these value stocks for a while, and they've been positioning in tech again, right? AI stocks, this, that. So this is probably one, Campbell Soup, that has been pushed to the side. I don't know, maybe. And that's probably contributing to this drop. And there's probably a fundamental reason as well that I'm not too aware of because, again, I have not done crazy research on this as of late. But it looks like they reported, where the heck are their numbers, guys? Looks like they did 50 cents EPS, which beat, actually, no, that was in line, but it's down year over year from 56 cents a year ago. And sales beat $2.07 billion versus $2.06 billion expected. All right. What was it last year, though? Sales last year, I'm not really seeing that. But overall, they see full year 24 net sales growth of negative 0.5% to plus 1.5%. So in other words, pretty flat, right, guys? So I'm not loving this chart. But again, maybe worth diving deeper into for a longer term play, maybe a value play. I know they have a nice dividend. Let me actually pull it up and see what their dividend's at right now, guys. Then we'll move on. I promise we're not going to talk about soup companies this whole video. Their dividends are 3.5%, which is honestly really good. I like seeing that. When I see an 8% or a 10%, 7% even on paper, it looks awesome, but it makes me a little bit nervous, right? Have you guys heard of dividend yield traps? We're not going to get into that in this video, but that's what I think of when I see 8 to 10 to 12% dividend yields, and when I see a 3.5, I'm like, all right, that's healthy, and especially when the stock's down big time. I mean, think about it, guys. When Campbell Soup stock was pushing $60, that dividend had to have been like 2% or something like that, or 2.3, whatever it was. Of course, as the stock price goes down, dividend yield goes up, if you guys didn't know. But we're not going to get into that in this video. Dollar General, DG's the ticker, guys. This is one that collapsed when the numbers came out, and it's down again today. It's down 6.3% on the day. So let me show you guys. They ended up reporting on the 30th, so 2 days ago. They dropped from 158 to 128. That was a 20% drop after numbers came out, and they're down again. Like I said, 6% on the day, not looking pretty at all. So they ended up doing, it looks like, EPS of 213 versus the 247 expected. So they missed badly. And last year they did almost $3 a share in EPS, and they see sales, or they did sales of $9.8 billion roughly versus $9.4 from last year. So that is up year over year. But it is not above the estimate of almost $10 billion. It was $9.92 billion expected. So they missed EPS, missed revenue. Looks like they're cutting full-year sales growth. Not a good sign. They see full-year same-store sales down, which is not good. So Dollar General is getting a beatdown right now. I mean, this stock was $250 back in early January, late December, and now it's at, $125. So essentially this year it is down 50%. Unreal, 50%. So this is, this could be one that might be worth looking deeper into, kind of like Campbell Soup. I mean, this is clearly one that has been thrown to the curb, and there could be some value. I'm not looking to go and just dive in and blindly buy it personally, guys, right now at least. But, it's one that's down a ton for a big brand, big company. That probably isn't going anywhere. Never say never, guys. There could be some problems going on under the hood that we don't know about unless we go dive fully deep into the company. But right now, man, not looking so pretty. And when it comes to their dividend yield, it's currently at 1.5%. So really not that bad. But it's not like NVIDIA where it's, non-existent. They have a 0.04% dividend yield or something like that. It's solid. 1.5 is solid. But again, there's probably a lot going on under the hood right now with Dollar General, so keep your eyes on that one. And the last one for this video, which, by the way, guys, if you stuck till the end, I appreciate you all as always. Feel free to hit that like button. Feel free to subscribe. And if you have not followed me on Twitter yet, what the heck are you waiting for? At StockSurfest, or just type in Stocks Talk Stocks. It's also linked down below. I appreciate you all. UBS, guys. UBS Group is another one that reported, and let me see quickly what they did. And let me tell you, man, this is very overbought right now, and honestly, I'm not touching this thing with a 10-foot pole. I'm just telling you guys right now, this thing is way overbought. Maybe if it pulled down to the mid-low 20s again, sure. But here, in the mid-high 20s, I am not too, I'm not too, what's the word here? I'm not liking it. Let me just put it that way. I am not liking it. So they did EPS of a negative 1 cent, which it looks like, was that in line with the expectations or not? I actually don't see it here. But it looks like revenue came in at that excludes goodwill. Actually, I'm not even seeing their revenue on here. What the heck's going on? They did $9.54 billion of revenue, which crushed the $8.57 billion. Holy crap. So they beat that by $1 billion. Very, very nice beat there for UBS. And again, their stock's pretty overbought. I'd be careful. I mean, if this thing were to come down towards the lower mid-20s, I'd be all over it. But right now, patience, guys, patience. At least that's what I'm personally doing. So with that being said, guys, I'm going to wrap up the video. If you enjoyed it, you know what to do. Hit the like button, do all that good stuff, subscribe, and don't forget to get up to 16 stocks for Moomoo. I'm telling you guys, this is by far the best promo right now. Just use that link down below or go to stocksurfest.com/Moomoo. If you fund your account at least $100, you get 5 stocks right off the bat, each up to $2,000. And depending on how much more money you deposit, you can get a free share of Google stock or Tesla stock guaranteed, plus a bunch of other perks, guys. So use that link down below for Moomoo. And of course, that is an affiliate link. It helps out the channel. I appreciate you all as always. And with that being said, folks, cheers. I'll see you in the next one.